Welcome to the What's Your Deal podcast, where we discuss business acquisitions, investments, management, and exit strategies. I'm your host, Matt Euler. Let's dive in. Well, welcome to another episode of What's Your Deal. I'm joined today by Maxwell Nee. So grateful to have him. His background is quite extensive. I'll read you here his introduction. He's the chairman of Family Office Insider, which is Singapore's largest unmonetized network of family offices, entrepreneurs, and investors. He also has extensive experience building and selling growth stage companies across multiple industries. He specializes in identifying and structuring transformative deals by bringing together the right team, funding, and market gaps. His work spans sectors including renewable energy, sustainable fuel, and large-scale mining, and delivering extraordinary value to his partners and investors. Maxwell's passion is to empower entrepreneurs and investors to pursue high-impact partnerships and create not only financially favorable returns, but also freedom, flexibility, and fun. So Maxwell, thank you so much for joining us today.
Yes, Matt. Thank you for having me.
Absolutely. And as the title of our podcast is, What's Your Deal? I'm so intrigued to learn more about what it is that your deal is. And maybe we can just start with, how, based on your background, how did you start out in the business that you're in now?
Yeah, good question. So like most people in the investment world, I started in an unfulfilling corporate job. So I was in an unfulfilling corporate job in banking, and then, went off and then started working with my family. So my family's business is in real estate development and private credit. So did that for a while with my brother. And then we got super caught out during COVID because, as most people found out, if you had anything under construction during COVID, you got massive delays, and it really exposed the real estate industry. So since then, I realized that we really need to get outside our comfort zone and try to do things in different industries. So, I went to look for things that I understood, which is like mining, agriculture, waste, the waste industry, like waste processing, because we're bricks and mortar type of entrepreneurs. We're not quantum AI entrepreneurs type of thing. And I had an idea. So my idea was, I've got some friends that are doing different things. Like some of them are doing, commercial real estate. Some of them are doing, things in the healthcare industry. So I had an idea to put them into a group chat, just on WhatsApp. And then I put 5 of them. They were all sort of family offices, family businesses in their own right. I wouldn't say we have a family office. I'd just say we have a family business. And after I put them into a group chat, that just sort of grew and grew and grew. And then all of a sudden, I've got 200 plus people in the database, and more than, I'd say, 60% of those have come from referral. And that's sort of what's grown into the unmonetized community out of Singapore.
Very good. And so one of the things you mentioned, and I'm a huge advocate of people having core competency in the area that they are going to pursue. If it's buying a business or and most of the audience that approaches us and as listeners are interested in business ownership. So did you have an extensive core competency in mining and some of these other areas that are really deep knowledge? Is that something that was part of your W-2 background, or how did you get so knowledgeable in those areas?
No, so my function in this is I'm the finance guy.
I see.
So I'm like the banker. Yeah,
okay.
yeah. So I help them to find the money, which could be equity, which could be debt, which could be sales. I'm a big advocate of, not raising money when you don't need to. So, could be equity, debt, could be pre-sales, could be a JV, could be assets. Like for example, I have a friend that they're a bit like a mining company service for hire. So they have the team the equipment. They don't put in money, but they'll literally come and do the job. So they'll literally come and do the digging, and they'll fly around the world and follow the mines.
Wow.
So funding doesn't have to be, uh, you know, give me money and I'm going to go spend it. If you have team members that can do the job, that's much better.
For sure.
Yeah.
Well, I appreciate that. And especially part of what that speaks to me is that, you've got your role and your partnerships, and you've got other people who have their role and their strengths, and together you create an effective partnership. You had mentioned partnerships in some of the information that I had seen about you. And I'm just curious, partnerships get such a negative rap so often. And I personally think it's because typically we hear about the ones that don't work, as opposed to all of the amazing partnerships that do work. What's your view on partnerships and how you structure them to be effective and last the test of time in a lot of cases?
Yeah. So partnerships, I think it gets a bad rap because it's a lazy word. It's like the word collaborate. Like I hate it when people say to me, "Oh, let's start a collaboration." I'm like, what does that mean? That's like saying let's start a cloud. Like it just has no meaning. Like there's no definitive start and end. And when you're doing things and you're asking for something, whether you're asking for money or you're asking for sweat equity or whatever, you have to be very, very clear. The expectations have to be very, very clear. They have to be black and white. Otherwise, people get upset, right? Because what's in my head isn't what's in your head, right? So I think ultimately it just has to be clear. And then if it's clear and it's agreed up front, then there shouldn't be an issue. But it's things that people leave to be sort of agreed on the fly that can create the bad rap, right? Because it's a bit like a relationship without expectations, So I always relate it to dating. In dating, you'll find that life is a lot easier when you're really clear. Hey, look, I'm 32. I want to get married. I'm tired of, just dating and seeing how things go. Like, I've got serious intention. If you have that type of language in date one, then you're going to have very different date ones compared to, oh, let's just see how things go, and let's see, keep putting opportunities in front of me like date 2 and 3 and 4 and 5, and then let's see how much commitment I feel like giving at that point in time. That's just like a recipe for disaster in the dating space and in the business space.
Yeah, I couldn't agree more. In my role as a broker, lots of times I'll have people who come to me with their partnership disputes, and they're trying to dissolve the partnership. And it's typically because they didn't do exactly what you just described, which is getting clear on the rules of the road and making sure everybody's got the same expectation and understanding. For me, that has typically led to effective partnerships. And one of the tools I use personally to do that is the operating agreement. The operating agreement is filled with all kinds of things nobody wants to talk about. And so it's a great opportunity to talk about them up front to make sure that we are all on the same page, like you described. So one of the things that you've shared in some of the information you convey is about the mindset of deal making and wealth creation. And when I saw that, I became very intrigued because it's fascinating to me how powerful our minds are, conscious, subconscious, and all of that. So can you share what that means to you and in your experience?
Yeah, good question. So I've always loved learning case studies, and I've always found case studies very, very fascinating. A really famous example of a case study in the deal making world. I don't like using this term, but just to sort of, because it attracts the wrong attitude and the wrong people. And the term is like none of your own money. That term shouldn't mean you just go around, trying to take. I think it attracts people to just try to take because they're like, oh, if I bring no money, then there's no upside for me to take. No, that's not how it works. None of your own money is another way of saying you have to be ultra, ultra resourceful. And all the best entrepreneurs in life have always been ultra, ultra resourceful. You've got entrepreneurs like John D. Rockefeller, Richard Branson. Obviously, they didn't have $1 billion to start their $1 billion companies right at the beginning, they've often had very, very little, but they were resourceful enough to create something attractive to bring the bank in, or to bring a partner in, or to control something that they could then leverage to control something else, right? So that there's a famous example of how Richard Branson, the British entrepreneur, started Virgin Airlines. So I think he was in the Bahamas or the Caribbean somewhere, and the airline. It was back in the day where people had those propeller planes, right? So the airline had canceled the flights because something had happened to the plane, and there was about 28 multimillionaires that were stuck. And then he was like, "This is really bad. I want to get home." Didn't take no for an answer. What can I do? And then he went walking around outside, and this is one of those airports where it's like a hangar, it's not like a real airport. It's like a private jet type of hangar thing. And he found another pilot that was just sort of sitting around outside cleaning his plane. And he said, "Hey, can I pay you to fly us back to New York or London or wherever it was going?" And then he said, "Yeah, sure." He said, "This is my rate." He said, "Great." So he took the rate, doubled it, and then wrote it on like a chalkboard and said, Virgin, because his company previously was Virgin, said, "Look, Virgin flights back to mainland, $3,000 a flight, flying soon." And then everyone bought, obviously, because they're all multimillionaires and they're stuck on an island, right? And then that gave him the idea to start Virgin Airlines, and that gets even better, right? So this is with no money, but no money doesn't mean, no money means you're 100% solution focused. You don't just throw money at problems, you throw solutions at problems, right? And sometimes you have to spend money, and that's fine, but you're more diligent about how you do that. So then what he did was he called Boeing more than once, I don't know, I think almost 100 times. And he said, "Look, I've got this." He's like, "Just humor me. If you have an old Boeing lying around, could I rent it?" They said, "Look, we would never do that, but we do. But we would never do that because, we've signed contracts and stuff." He said, "Look, just humor me. If you were to rent it, how much would it cost?" He's like, "Well, it would be," I forgot the number, but it's like $500,000 a year. The first payment starts 30 days after the plane lands at its first destination, right? So 30 days in arrears.
Mm-hmm.
And then he's like, "Okay, great." Eventually convinced them to give him that plane for one flight. And then he launched an airline, a website. You have to remember airline flights are sold 4 months in advance, right? So he's got the cash 4 months in advance, and then he's got the first payment due 30 days after landing. And then, voila, launches the first, airline with no money, no upfront capital type of thing. So yeah, that's one example.
That's great. Yeah, those are actually great examples and powerful stories about, seeing what opportunity was buried in that scenario to create wealth. Yeah.
Yeah.
So you've raised lots of capital for lots of projects. What mistakes do you see entrepreneurs make when they're trying to raise capital? And maybe it's their first time, or maybe they're experienced. What are some of the things that jump out at you?
Yeah, good question. But I think the more accurate question is, what mistakes have I already made? Because I know those very,
Right.
very, very well, right? So, I've done door-to-door sales. I've done door-to-door sales. I've done telecommunication sales, like call center, outbound, inbound. I've done, selling internet plans at a telco store in Australia. So I've always been in a culture of like, you really have to show up, bring the energy, kick the doors down type of thing in sales. And the hardest thing for me to learn in the investment world when you're talking to investors is that can work against you. The more enthusiastic, the more the more like polished you are, the more aggressive you are at trying to sell an investment. Investors don't like that because, and it took me a long time to learn this. And I sort of, can I swear on this podcast?
Sure.
Yeah. So I sort of shit the bed a few times as a capital raiser when I was raising for my projects, because what I learned is that in the investment world, whether you're talking to an institution or like a family office, or you're talking to a high net worth individual, or you're talking to like an angel investor or a professional or whatever, the worst thing that you could breed is desperation. And sometimes passion, enthusiasm, aggression, really consistent follow-ups can be perceived as desperation, even though you're not, even though you're just genuinely excited, even though you're just like, so, you're working on taking a rocket to the moon type of opportunity, and it just really excites you and you just can't help but talk about it. But if you do that too much to those types of people, they lock up. And then the worst part is that they often lock up, but they're very, very polite. So they'll lock up and then they'll still take you to coffee, and they'll still, take you to lunch, and they'll often pay for the lunch, but then they'll never talk to you again. So you get like this, just like in dating, you get this polite cold shoulder, like this death by a thousand no's, very slow no's. So I've really learned that posturing, and you want to be genuine when you posture, right? But posturing to level, like to meet the same temperature that your prospect has is very, very important. That's probably the most important thing, and it's such a funny thing because it doesn't make any sense, right? But it's this whole like hard to get thing. Like it's super, super about hard to get, it's the bigger an investment is, the less people they want to show it. They're like, oh, if I show these 5 strategic people, they'll tell their friends and I don't need to show anymore. And it's very much like a chess game in that aspect. It's not like, here's my list, I'm going to pick up the phone and just bang out these phone calls. No, it's like this domino effect. I'm going to knock over this domino here and that domino here and just try to have them fall over so I could reach that person, and that person will come to me, and then I've got the leverage, and it's things like that. That was very, very counterintuitive for me to learn.
Well, it's an interesting conversation. As you're sharing that, I'm thinking about times when people have come to me to invest in something, and if they're pushing too hard, I do exactly what you just said. I'm repelled just because of the energy. And if it's a good enough deal, they don't have to say a whole lot. I'm going to see it, and it's going to be worth working with and putting money into. And so, it's a fine distinction, because I also think in what you said, there's a difference between passion and enthusiasm and too much salesmanship or pushiness or something along those lines. Yeah. So that's a great distinction. And, as you shared, go ahead.
And just to give an example, sometimes the best pitch that you could do isn't like a pitch deck or whatever. It's just keywords. It's like, let's say, like, Matt, what are you interested in terms of an investment industry?
For me, it's generally businesses of any kind. There are certain industries I rule out, but I appreciate the returns that a well-priced business can provide when operated wisely.
Yeah, right. So if someone says to you, hey, Matt, I'm working on this new investment. Like, they're not saying, hey, I've got something for you to invest. They just say, hey, Matt, I'm working on this new investment. I really like it. The returns are in the 20s. Right. Has that piqued your interest?
Yeah, absolutely. They're speaking my language.
Right. And that's all they need to say. Like literally that's the best pitch that person could do to open up the conversation, instead of whipping out the laptop, pulling up the slides, and just, shoving it in your face. So I really learned that, like, finesse and posturing is is really key to because investing is a very intrusive thing. You know, like you're literally saying, I want to get deep into your pockets. Like that's the art of raising money. It's literally just asking you for money. It's like, you know, at a charity event saying, hey, look, do you want to support this or not? You know, and it's a very confronting thing. So it has to be done in an unconfronting way. Otherwise, you just end up, you know, pissing people off.
Well, and it's just to go down this road a little bit further, the times that I've offered investments to others, it's not because it's necessarily good for me. It's because it's a good investment and I want to share it. Now, granted, it takes a certain number of people to make it work, depending on the capital raise and all of that. But if I don't believe in it in the first place, there's nothing to talk about for me from a perspective of trying to share it with others. So yeah, so I appreciate you bringing that up. It's a very interesting, especially for people who are trying to start out and needing capital to be able to achieve the outcome they're looking for. That's a distinction that a lot would not think about.
Yeah.
Yeah, that's very good. In your intro, there's a reference to developing deals where fun, freedom, and flexibility are the values of the deals that you want to participate in and bring people into. Can you walk us through what that means to you?
Yeah. So fun, freedom, flexibility, those are just like three words that I like. And I think I very intentionally put the word fun there at the beginning because I think that when you're an entrepreneur, you know, whether you're an entrepreneur, broker or deal maker, or you're an operator or whatever, it's very easy to just say, oh, I'll have fun later. And then you get into like this really deep, delayed gratification pattern. And then all of a sudden you're miserable and then your health goes out the window and you gain weight. And we've all done that, right? And then we've all had to really snap the rubber band back to now become, you know, our own version of peak performance entrepreneurs, you know, in health, life, wealth, you know, all the different parts of the wheel. So what I've learned is often the bigger deal you work on, the easier it is to do, which is also very counterintuitive, you know? So people think like when you don't grow up in a super wealthy environment, you know, like maybe like for me, example, like I went to a public school. And I could really, after school, you learn the difference between people that go to a public school and people that go to like a private school or boarding school. Like they just see the world very, very differently. You know, like I saw $1 million as like a huge, amazing amount of money, right? But then people that go to public boarding school, they see $1 million as the minimum, right? So they're like, I'm not even getting out of bed unless my personal take home is $1 million, right? And that just creates like two different levels in the building. You know, there's a level 1 and a level 2, and they're just completely different levels. They got different views and everything else. And when you are doing deals, what you quickly learn, and you know, you would do this as a broker, is that it doesn't matter if you're doing a $100 million deal or a $10 million deal. The work is the same. The work is largely the same. And typically the people that you deal with at the $100 million level, they're much more professional. Not as in the other people are like, you know, rude and, you know, scrappy, but it's just you're dealing with pros instead of amateurs. And when you deal with pros, you learn pro habits, you know, you operate more like a pro yourself, and then it forces you to level up. And it's often smoother because professionals love to work with other professionals because they want things to be smooth. They've done it a million times. And this has no emotion. You know, it's a no emotion exercise where they just do this and it might look super hard, but it's another day's work, you know? So I think that when you focus on a few things like the size, like to attract professionals and to attract A players, the deal itself just needs to be big enough. You know, I made a lot of mistakes going into deals where the ceiling just wasn't wasn't big enough. You know, the maximum top end was everyone took home $500,000 or everyone took home $1,000,000 instead of everyone taking home between 10 to 50. You know, if people can take home 10 to 50, you really, really, it's easier to attract A players. It's easier to attract investment. It's easier to attract people to work for equity, right? So how you fund the deal could just be you need, you know, it could mean that you need 2,000 lawyer hours, you know, over 2 years. And you could either pay for that or you could find a deal big enough that the lawyer can pay for themselves by being a partner of the deal, you know, so things like that. And then everything sort of cascades and works backwards from there.
Yeah, and I've seen exactly what you're sharing. And for me, it's like a sophistication level in it. It's not like good or bad that somebody doesn't have it. It's just a matter of they've been around the block enough. And to your point, the deals, typically the larger deals are smoother. And to a large extent, it's because of the level of sophistication and experience that the people that are playing in that arena have, as opposed to somebody who's just starting out. And we all started out somewhere. So I'm not saying that doesn't apply for people. I'm just saying there becomes at some point, the larger deals become easier to facilitate with the people that you're working with. And it sounds like that's the same thing you're sharing. And that's where the fun, freedom, and flexibility come into play.
Yeah, because, you know, your time's a lot more efficient. You know, you might find that you're only on calls one day of the week because what happens as well, like when you work on a really large deal, like $100 million deal, and let's say you're looking for funding, which is a lot of people would come up against that as a challenge. But when you're looking at a really big deal and you're looking for $100 million, there's typically the amount of options that you have to find $100 million is like typically less than 10. Right? Because not many people have $100 million. Compared to if you're looking for $5 million, you could have 100 options, which is basically, you know, 100 individuals put in 50K each or whatever that number is. So when you have narrow options, you have simplicity and you have focus because there's only 5, you know, and you could focus on 1 a month and get it done in 6 months type of thing. So that's another thing that's really amazed me about big deals. And then also in the big deals, the guys that have $100 million that could invest, they typically only want to talk about investment. You know, they don't want to talk about comparing you against other things. They don't talk about comparing you with you know, keeping it in a savings account or comparing you against crypto. Like, so you're not coming up against all these other competitions because they're in like a very, very narrow focus vertical themselves, and you're just meeting them in their exact shop. You know, you're not meeting them. You don't have to meet them at the barber shop and try to turn the conversation from, you know, Sunday barbecue to, hey, do you want to put 50K into my $5 million investment type of thing.
So in the deals that you're working on, where you're the finance piece, are the deals coming to you and then you're helping to structure them, or are you out searching for capital for deals other people brought you? What's your role typically in?
Yeah. I only like to do things where, you know, I work with people really as a team player. Like I don't want to be just like a service provider because you know, you don't get any equity that way. And that's what's really interesting. And B, when you're a service provider, I could be a service provider to anyone, you know, and if I was willing to be a service provider, then I would just go work for Goldman Sachs. You know what I mean? Like if I just wanted to be, like I would get paid more there, I'd have job security, I have a bigger brand, credibility. But, you know, I like to work in the things where people are looking for team members. It's like, hey, look, I'm a really good operator. I'm a technician, I'm a scientist, I'm an engineer, I'm a PhD. I need someone to watch my back on the finance and the business side, to bring the money in, to work with the team, to you know, help generate sales. Another asset that I think is really easy to bring to the table is where you live. You know, for example, I live in Singapore, and that does a lot of heavy lifting, you know, in terms of people wanting to bring me onto their teams because they're like, we would love to have representation in Singapore because, you know, A, it looks good, you know, B, you've got a really good network there, And that's just like a double whammy. If we were to ever be a, $100 million a year revenue business and we were to hire a board member, that's exactly what we would look for. So we've hired our board member early, type of thing.
I
So
see.
things like that, like, you don't always have to bring experience, relationships or whatever to the table. Sometimes you could just bring a geographical advantage.
Very interesting.
Yeah.
So as we talk our way through this, can you share an example of a deal that you did that's maybe one of your best deals, and what it is that made that work? If you could identify one thing, yeah.
There's one that I'm working on now, which I can't talk a whole lot about because it's not done yet, but I can tell you like an adjacent one.
Mm-hmm.
So I saw on LinkedIn that I don't know how true it is. It's just one of those posts, that in Mexico, they found a way to recycle avocado seeds because, Mexico is like the home of avocados. It's a mega industry there. All of, America's avocados come from Mexico type of thing. I think a lot of Australia's as well. Like they go all around the world, and a lot of it goes into guacamole, and guacamole has no seeds, right?
Mm-hmm.
The avocado is extracted. So they have like millions and millions of tons of waste of avocado seeds. And they've turned those into a new form of like plastic to make like forks and spoons. That's then, biodegradable in about 240 days. So you turned a waste into solving another waste problem, right? So that sounds really cool and it sounds really obvious now that, you've said it. But, a way to solve a real gap in the market is like waste. Some of the biggest companies, tech companies in the world, they didn't focus on creating something new. They focused on recycling like an unused waste. So another deal that I have is an advertising company called Winboard, and their market gap is they're an outdoor advertising company. So they originally were just placing ads on billboards, right?
Mm-hmm.
Which is nothing new. And then they always go to this one shopping center that has a massive car park, and next to the massive car park is a building, like a very old grey building, and you just see like this big ugly wall. And he said, I wonder if we could put an advertisement on that wall. So they made up a website, and then they said, look, would you like to advertise on this really famous car park that everyone parks at every Sunday because you go there, you buy your groceries and stuff. And it has like, I don't know, 50,000 people that would see this wall every single Sunday, and you see it with no distractions because you have to walk towards it to get into the building, right? So then they put up a thing, and then it was taken up immediately. So $5,000 a month, and then they just put a vinyl there, like literally just a poster, hung it off the wall. They pay the landlord 20%. They pay the landlord 80%. They keep 20%, and then they've repurposed that unutilized, wasted wall into an advertising wall, and now they're building a business around that. Where they're basically unlocking unutilized real estate. In podcasts as well, like not just physical world. So like in podcasts, in movies, they've gone into the entertainment industry. They're trying to look at gaming. They're trying to get into Grand Theft Auto 6. And they're actually also in New York City cabs as well. So there's little screens. Not many people cover the advertising on those screens, but you could place an ad in those screens from their platform. The big red buses in London as well. If you want to place an ad on those, you can go through their platform. So things like that is like, and that's $1 trillion market, so you found a really good market cap. The market gap is a gap that has a lot of supply because you're recycling waste, right? And then, the market is big enough to, attract A players because A players can get paid, what they're worth. And then, that makes it easier to raise money, and then everything just falls into place.
So on a deal like that, was that brought to you, and what's your role in it? Is it just capitalizing the opportunity and the need for funds for growth?
Yeah, so it was brought to me in the very early stages of fundraising,
Okay.
and they originally were raising less than $1 million. I said, and this is another thing, I said less than $1 million is very hard to raise for because it implies that this is an angel investment. An angel investment also implies that it is risky. It's at its highest risk stage. You know what I mean? So just the size of the ticket in itself communicates something. So I spoke to the team. I said, you're better off, looking to raise 2 million, having the valuation be bigger, but not unreasonable. Like you still sell the same percentage of the company, but just make the numbers bigger. And maybe you just do the raise a little bit slower. So instead of trying to rush it, and everyone wants it done yesterday, and instead of trying to rush 500,000 in 30 days, why don't you go for 2 million over 6 months? Because their revenue is growing very fast. So 6 months later, their revenue would basically be double. So they could ask for a high valuation, so you rather slowly backfill a higher valuation with bigger numbers and ask for a bigger number instead of really struggling to just try to sell a perceived high risk investment with a smaller number. Because the higher the number is, the more mature the company is perceived to be.
Well, and that makes sense. So this was an existing business that was using this for expansion purposes.
Yeah.
And especially in that situation, I mean, having 2 million instead of 1 million, they could have ended up needing to do a whole nother raise shortly after.
Exactly.
Because it sounds like they were growing quickly. Yeah.
Yeah. And then you're also perceived as, forward thinking. It's like, okay, I'm working backwards from a goal instead of just 500,000 to get to the end of the year. And then the next, instead of just being reactive, and in your raising, you're being proactive. And then they didn't end up raising the 2. They got about half, but then they said, look, we're more than happy with half, right? Which is 1. But that's still double what they originally had planned, right? That's double the original budget. So it's a bit like that. It's a bit like you want to work backwards, you want to work holistically, you want to work strategically. And if you know what you're doing, there's no reason why you can't do all of that.
So in that example, were they just hands off and you were raising the funds for them, or did they participate and you were managing the inflow? I mean, what does that look like because I'm obviously towards the end here, I'm going to ask how people can connect with you. Yeah. So I want to really be able to identify the service that you're able to provide. And I know oftentimes that includes equity, but so how did that work?
Yeah, good question. So raising is a full-time job. So I wasn't doing it this time. It was a close friend of mine, and I actually ended up investing.
Okay.
But I've also become like an advisor to the company, expanding it into Singapore. So like everything that I mentioned, the geographical advantage or whatever, that all was what I brought to the table, which cost no money, right? But I also invested because I believe in it, and so. I raising as a full-time job. Any founder that thinks that they can raise and build a business at the same time, they're not being honest with themselves, because you're doing both badly. And it might cost money. Yeah, you might have to share some equity or whatever, but that's a better problem to solve than the problem of I've run out of money. You know what I mean? Like
Absolutely.
The problem of who can I trust to bring into the team to do this job? It's a better problem to solve than I've already run out of money, or I'm already running out of money. Now I got to find a job, or I got to find a way to patch things because I've totally bit off more than I could chew. So yeah, that's how I help people. So the ideal people that I help is like I said, an entrepreneur that's probably more technical, that just wants to focus on their products, on their market, on their customers. And, let me or a guy like me focus on the other customers. Because, when you're talking about investment and scaling and that type of thing, you now have 2 categories of customers. You have your customers that buy your service, and then you have your investors,
Mm-hmm.
and you owe your best to both of them. You know what I mean?
I
So
do.
you owe communication, you owe service, you owe to be able to pick up the phone. You can't go cold on emails. You can't let emails go for 5 days, right?
Yep.
Because both of them have trusted you with money, and you got to have someone to watch your back on either side. Otherwise, you know, one of them's going to be unhappy, and if one of them's unhappy, it can very easily become a house of cards.
Mm-hmm.
Yeah.
Well, that's great. I appreciate that. And it's especially the communication piece. I think there's a lack of communication these days in so many areas, and yet it seems to be the solution to so many problems. And couple of the businesses I have an interest in during COVID got into real trouble. Came to a full stop, one of them. And it was the increased communication with customers and employees and the lender that allowed us to move our way through that, as opposed to sticking our heads in the sand and not communicating. So yeah, your point about communicating with customers and investors being fundamental I couldn't agree with more. I think it's really just the primary has to be in place. So, well, yeah, that's great.
And so just one thing on that. So, as an investor, myself, one of the first litmus tests that I do to size up the character of someone I'm going to invest in is, are they scared of giving bad news, or will they give me the bad news? Because there's going to be bad news.
Mm-hmm.
To pretend that there isn't, it doesn't make any sense. Like that's how like the fraud happens and the Ponzi schemes happen, because you have an operator that maybe has never been challenged with adversity, and they've never had to give honest bad news, and they're scared of it, and then they'll try to hide it, and trying to hide it starts as a small thing, then it becomes like a big thing, like just adding a zero onto the revenue forecast, like that type of thing. That's how that starts. It starts as someone not being able to stomach giving bad news. So I want to know, after the first meeting, how do you give bad news? And then I will poke holes in that to try to pull that response out of them.
Yeah. I like that. I think the transparency and the need for it, it's, I've been talking a lot lately about guardrails and where, what's on the road and what is off the road. And one of the guardrails I'm hearing you talking about is somebody willing to communicate good and bad. And if they're not able to do that or willing to, that's going to be a boundary for you. That's just not something that's negotiable, it sounds like.
Yeah.
Yeah.
Yeah, exactly.
Yeah.
Exactly.
That's great. Well, I've got one last question for you, and this comes really to roots. Everybody I've met has had somebody that helped them get where they are. So you've come from, a place where you referred to as, public school and so on and so forth, into quite a position of being able to raise substantial amounts of money for projects. So who helped you along your way? Is there somebody that gave you a hand up that you'd like to share with our group to give hope and an example of how this can play out for them?
Yeah. So many. So many. I really follow Jack Ma's advice. Jack Ma is the founder of Alibaba, and there's a really famous video where he says, in your 20s, find the best person that you can work for and just work for them. Like just absorb, because you don't know anything. And the second you think you know everything, like you've closed yourself from growing, right? So I'm in my 30s now, and I'm still not satisfied with how much I've learned. So I'm still looking for more of that. So I think the thing that I would say is never stop looking for that. So I've got a few people that I love to spend time with, and I love to learn from them and grow from them, and just watch how they do things, like especially the little things. Even just watching like how they dress, what kind of clothes they wear, what time they eat, what time they go to sleep, like just really reminding myself that like excellence and, achievement and stuff and success, it's a it's a pattern. Like there's patterns. And if you just start doing those patterns, then, things can much more easily fall into place.
That's great. Yeah.
Yeah.
Well, I appreciate that. Well, thank you so much for joining us today and sharing your knowledge with my audience. And it's very valuable part of the reason I love the role that I am in is because I have the opportunity to talk with people about what worked for them and how they got where they are. And so I appreciate you sharing that with us today.
Yeah, great.
Yeah,
thank you.
Absolutely. Well, that's it for today on this episode. I hope you've enjoyed this and picked up some valuable insights from Maxwell and what he's doing and how he's doing it, and also some of the very specific intricacies of the way he evaluates deals and people and relationships. Those are the gems that I know I will keep with me, and we will see you on the next episode. And that's a wrap on today's episode. We hope you enjoyed the conversation and got some valuable insights into the world of buying and selling businesses. Want to be a guest on our show? If you have a deal that you'd like to discuss with us or a business story to share, we'd love to hear from you. Shoot us an email using the contact information below in the episode notes, and let's make this happen. Never miss an episode. Make sure you subscribe on Apple Podcasts, Spotify, or wherever you listen. And if you found today's episode helpful, please leave us a review. It helps more people like you find the show.